Wow, people. Hello, Nick, recapping the day, the 14th of January. It's been another exciting day. Scoreboard red, but the win is for the Bulls, and I'll tell you why. The Dow is the worst of it, down 1%. In fact, why don't I go show you in pictures where this weakness came from? Come on. All right. The Dow. Basically, it's a collection of 30 of them. JP Morgan was the worst of it. It was a lot worse, 3.5% down. They missed big legal fees, blah, blah, blah. Took down the whole financial sector with it, right here, down here. And Disney and Company, McDonald's, Home Depot, Visa. So there was nothing happy except Pfizer, Merck, and United Health. These guys were somewhat. Okay, so that was the Dow, down 1%. The NASDAQ fared a little better, down 0.5%. Gilead reversed yesterday's nastiness. Google still shrugging off. It was up 1% in the face of a downgrade. Boy, that guy seems like feels stupid, I bet. Apple was a drag, but we kind of knew, but it wasn't as a big a drag as we thought it could have been, I should say. But I'll show you. Here is Apple. Pre-opened, I said 110 is going to be resistance. Look at that. It failed at 110 exactly right here. If it weren't for Apple, this last minute run would have caused the market to close green. I have no doubt in my mind. Okay, so what happened today? This is Apple. Let's talk about Apple. It's representative of what happened. We opened with panic, and then the sell-off all day trickling. Somebody said it's panic selling. It wasn't. This is not panic selling. This is panic selling. Okay, I've seen it. This is not panic selling. This is consistent selling, lack of buying, just trickling down, trickling down. Right here, that's panic buying. It took 3-4 hours to get to here and just 10 minutes to get to here. That's panic buying. And if it weren't for the lid on Apple 110, that panic buying would have gathered steam and they would have broken the high of the day and continued on high. So that's what happened in the markets today. So the Russell was the best. It outperformed all day. It did close negative, minus 0.4, but it was a lot better than the indices when they were way down. This is the S&P 100 was way down. It was a scary day. We were down over 300 points. So we closed down 185 on the Dow. All right, so this is how it looked in pictures. This is the S&P. Right here, we took a tumble based on bad retail report. We were down 11 points right here. Then we took down a dip down to like almost 30 points down, and then we opened okay and then trickled down all day down to revisit these trends, and I'll show you where these trends came from. Very important trends to keep a tab on. Then right here I called for a breakout. That was around the 2002 ES, that's the S&P, and indeed it happened, except for Apple just stifled it. Remember that picture I showed you from Apple? If it wasn't there, we would have closed up here green. So this got erased all day. You can build a box right here and say, okay, this was the retail report, but then we closed ignoring the retail report. Still a negative day, but nowhere near as bad as it could have been. This is the NASDAQ, kind of the same picture, and these are the small caps. The small caps were best all day. They held best. They held on above the low of the day for longest, and then they dipped down here. Right here is when I put the arrow. I put an arrow right here. I saw something unusual happen. I saw it start right here. I put a mark, and then it happened right here. That's a big candle that was red, and I said, I see something here. And then this brought us down to the 5 minutes. Each one is 1 minute. Brought us down to this, which was the low. This started the turnaround, in my opinion. And then from here, chuk, 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 chuk. Okay. Alright, so this is the dissection of the day. Google did well. What didn't do well is Tesla. However, it could have been worse. Down 6%, but look at the low of the day, 183. Closed $10 higher. But still, I still say on Tesla, here's a note I wanted to say about Tesla. Elon is, their CEO, is bigger as a liability to the company, to the stock price, and the company in this case, than Jobs was to Apple before he passed away, because Apple has a line of products that sells in the zillions, and the zillion people will line up to buy it. Tesla has 1 or 2 products that only 1 or 2% of the people are able to buy it. Until that changes, Elon is going to still be a risk to the stock, and that's why I do not like that company. It's overrated as far as the stock. It's a cool car. I wouldn't want to drive it, but I don't think the value is there the way it is now. Okay, so that's the Tesla point. Another scare today is copper. This is copper 10 years. This is October of '08. This is September of '08, October of '08. Look at that candle in September of '08. And then this candle in October. Look at that. This is, today was a crash it's 5% down, almost 4 to 5% down. That's a crash in one day. And last time it did something like this, it was not good. This was the '08 crisis. That's not good. So it doesn't say anything good about the economy. Now, in addition, it is used in China heavily as collateral to loans. If that's true, I've read. If that's true, then the asset now is cut tremendously. So if you lend somebody based on the fact that they have X in copper, and now that X is worth a lot less, you're going to come say, oh, wait a minute, your asset, now my loan is in jeopardy to you, because even if you sell that asset, you can't cover your loan to me. I lent you this much money based on the fact that you have this much asset that is worth this much. Same with oil. Those companies have borrowed money based on oil being at 100. So these people can pump and sell at 100 and pay back the oil loans. So now that can't happen. So now there's another scare in China. Besides, and on top of it, what does that say about consumption of copper in China? If this is a fundamental, I don't know copper. If this is a fundamental change, it's scary. The price wants to be around here. This is where all the volume happens. But dips down there happen. When it dipped, it was volume, but really this is where it wants to play. So let's see if it turns around. This is copper. That is scary. So back to the flexible grid there. All right, so price line today got a negative note, but it did shrug off the nastiness, the potential nastiness. The note is, and what we're going to say to that, that European currency issues and exposure is going to weigh down heavily on it. Yeah, really? Yeah, we've been saying this for months. And still, it was 1022 low. It shrugged it off, and let's see how it looks like. Price line. Still holding. But, you know, lower highs knocking on a floorboard. Will that floorboard hold or break? If it does break, this comes quickly. I'm not saying it's going to, but if it does break, it comes quickly. It won't break on fundamentals, but I don't like these humps. They're not a technical head and shoulders, but in spirit, that's what a head and shoulder is like. An effort, an effort, an effort, and all three of them failed, where the middle one is probably the biggest one, except for this one right there. Then they might be tired, they being the bulls, and then they take a rest, and then the bears take over for a little bit. So this area is not out of the question. So I am not jumping in long yet. I'm not calling for it, but I'm not chasing it right yet. All right, so this was Priceline note. Elon note, I already told you. Okay, and then another thing is, let me start. I'm jumping around. Sorry, it's been a busy day. Next week, we have the ECB event, correct? And people are saying, I got a question, say, what do they expect? We've been running up higher based on the ECB delivering something. He's been promising for 2 years. He hasn't yet delivered much. So he's expected to announce a QE in January 22nd, on January 22nd, the decision, and then they have a press release. So, press conference. So what they do is they're expected to do something big. And markets have been buying up. Recently, the red days, those severe red days, in my opinion, this is just purely my opinion, a lot of traders like me, I don't believe he can deliver anything this month. And if anything, it's going to be disappointing. So he's going to say something like, well, we haven't yet figured it out, but here's a little nibble, and then we'll figure it out by next meeting. And here's why we need to be pulling a rabbit out of the hat. Because things are bad, the growth is whatever, the inflation is not there, we don't want to be like Japan, so let's dribble up some QE here, which means nothing. So markets are going to be disappointed. So there are a lot of people that now starting to think like me that he can't do much this 22nd, and maybe they're pricing out some of that exuberance that was built on that assumption that he's going to deliver something. So people are pricing out what has already been priced in. And if that's the case, that's good news, because that makes the event next week a little less violent. So in case he delivers nothing or disappoints, then some of that steam has already been let off already. Now, they'll still be disappointed, but it won't be a crash. It'll be another 2% day. So that is the upside. I don't believe he can deliver anything. And if he can deliver, watch out for the shorts. There'll be a rip in the markets. All right, so and Europe was already down before our report in the pre-open today. So today's Europe close was not any worse than when it was in the pre-open. The pre-open, Germany was down almost 0.8%. England was already down 1.5% or something like that, 2%. So they were already red, and we just opened red and then got redder. I mean, we pre-opened red and then pre-opened a lot redder at 5:30 Pacific based on the retail report, which was disappointing, but not as disappointing as people make it out to be if you back out gasoline sales. Why is gasoline sales so important? Because oil is half price now. I used to pay $4 at the pump. Now I'm paying $2.50. So the gas station is collecting less money from me. So why is everybody surprised? Last year it was $4, and if this is year over year, then you have to compare to last year, and they're at almost half price. So I don't know why everybody's surprised about that. Alibaba is always a nice long when it gets hit hard. I sent out a note about that. Alibaba. This is, I changed it from a line because it's in spirit. It's a box. It's not a line. And this box I drew yesterday, and look at that. How nice of it not to pierce it today, right? But anytime it gets to 99 or 100, it should be a buy, because I don't see of any Alibaba specific issues. In other words, it's not down because it's not worthy. It's down because the market is down 300 plus points when it was down. Shrugged off the low, closed towards the high, still red, but closed towards the higher end of the day than the lower end of the day. See? So it opened up here around 100. They tried to run her up, and then they tried to sell it off, rejected the sell-off, and they closed close to the open. So they rejected the low prices of 98 and change. I think it was 98.12, the last one I saw it. 98.06. So I dipped my toes in long. You saw that. I don't like this lower highs, but it doesn't have any Alibaba specific issues, and the numbers should hold up. All right. As of Tesla has Tesla specific issues. And remember when I told you that I see a head and shoulders, complex head and shoulders, and this is, look, I've drawn this. I can't remember. I should dig up when I drew this. I wish I can tell. But it was a while back, and here we are, just inches away from it. It may not get there because of this consolidated area here from which it sprung up. So people are going to find value in it. Not me. Not me. This is heavy volume day. People are spitting in his face. It's amazing how much he hurts Elon. His words hurt the stock price. He may be a good company leader. He may be an inventor. He may be an innovator. But he should just not talk as much. He should let the CFO talk. In this case, usually it's the other way around. But anyway, so copper was the another point I needed to make. We did that. One thing I want to remind you is I always say, I use an acronym. Let me write it down. I don't know if I can. AGSIB, right? What is that? Well, let me rephrase it. Let me restart it, saying that yesterday we saw a 50-point move swing in the SPX, 100, more than 100 in the NASDAQ, and then we saw a 400-point swing in the Dow. So what does that mean? It means I practice AGSIB. This is an acronym I made up not too long ago. Those of you who have been with me for a while know exactly what I'm talking about. Sorry about that. I promised somebody I would take her call. But so it's any green I see I book. Basically, if I have any profits, I book it, because I am not guaranteed that tomorrow is going to have the same profits. So somebody asked me, should I close it? When in doubt, yes. When in doubt, always out and book it. Or if you're worried about a position that's slightly red, just a little bit red, should I defend it? If you're worried about it, close it. That's what I do. All right. So price line, we talked about it. Retail gas station, talked about it. Okay, so here's an important point in the oil. By the way, oil ended up green today. Options expirations, I think, issues, but it was up 5-6%. Heck of a rip, right? But I can't trust it. So, but here's what I tell you about oil. All right, so I've told you that oil is a war right now, an economic war. This is the last 10 days. That's pretty important. Oil is an economic war, and the OPEC, mainly Saudi Arabia, is waging war on the West, mainly the United States, to drop the price low enough to hurt everybody. And they can break even on oil, I think, under $10. Other places need $60, $70, $80. So they might be winning the oil industry war, meaning they're hurting the oil industries. But I believe that the West is winning the economic impact of low oil war. So yes, they're hurting our industry, they're hurting the Canadian industries that are specific to the oil market, but the benefit on the economic, the socioeconomic area, we're winning the war, we as in the West. Luckily it's a war of words and money and not people. So I think we can withstand it longer than they can. So if oil starts to go up from here, I won't be surprised. So if anybody wants to dip their toe in buying oil somehow, I don't know how, but maybe invest in the big companies like I've said before, or even the USO, I'll be a proponent of that. I would not say you're crazy trying to pick a bottom in oil. That's all I'm saying on oil. So that's an important point there. All right, so anything to be said there? Not much. I don't want to dwell on stuff. So let's look at the SPY. Volume is just as big as yesterday. The drop was scary. Look at that. We pierced it, touched it, kissed it, and bounced off of it. We've done that several times, and this is danger. The only time we failed is the October whoosh down. But I think rates now are low enough that this was the low rates that caused that whoosh. Maybe I'm wrong. The 10-year rates are 1.837 right now, and today they were under 1.8 for like a flash, and that was pretty scary. So here, let me show you that in pictures. So anyway, before I switch over, we're still within the acceptable level here on the SPY. And let me show you the 10-year since I just mentioned it. This was the correction in October. This is today's candle. Look how much lower it was right here. Whoa! I can't even remember the last time it was here. Let me go 20 years once and for all. This is today. So I guess 20 years is too long. Let's go 10 or 5. 5 years. 5 years will cover it. So this is the 2012 area. Yep, this is where 2012 starts. So 2012 it was lower than today. So it could go lower, I guess, but it's not my area of expertise. I'm just merely reporting on it. But that is a scary proposition. So today it spooked the markets. Let's see if it can stabilize. Again, it rejected the very low, closed red, but way better than halfway of worst case scenario. All right, so to the Qs we go. Those are the Nasdaq. The Nasdaq, I don't like this. I've told you before, lower highs or lower levels, and we broke this trend. As a matter of fact, I think the volume is also big, not as big as yesterday. The NDX shows it better because I have these drawn. We've lost that for sure because now we have 1, 2, 3 candles lower, and we're in danger of we're still using this, which was previous lid resistance, and then boom, we broke out of it. Support, support, support with a question mark. All right, so if tomorrow we hold the 4100 level, I'm a happy camper. It's not looking very good though, but we'll see. RUT, those are the small caps. We are losing this one, folks, and anytime we lose that one, it's not pretty. I don't want to ring alarms, but it's not a science. Like if I had drawn it properly or redrawn it, given the last 2 candles, I guess I could. What is it? I guess I could have done this, but that would be adjusting to candles that I'm seeing, right? And the spirit is, it's not an exact science. It's still defending this line, which is also not an exact science. So it's hampered. Let's put it this way. It's a well-contested area, though, so that's a level of comfort. We'll see what happens tomorrow. How's the volume on the IWM, which is the sister index to the Russell 2000? And this is not as high as yesterday. Yesterday it closed green. Today it tried, but it did hold up the market together. So there's still hope. However, it is a dangerous area, and we're playing with fire. That's what I'm saying. We are playing with fire. So I don't think I have anything else to cover. 20 minutes is long enough here. I do have a lot of individual names to cover. Twitter was green. That's good news. GoPro, boy, boy, boy. Bring your neck brace for GoPro, my friends, because it was up 5% flat, and then 49 to 50, almost 3, 52.80, then the 49 or 50. So erased everything and then recovered everything. So neck braces, please. I'm not trading that bad boy. Some people made money. I'd like to stay away from that. The banks are hammered hard. That's it. Some of the momentums are green, but not all of them. Actually, a few of them are green. Like Netflix is barely green, and so forth. So tomorrow's another day. How do we open? I don't know. We should open with a positive bias just because of today. We kind of closed on a good note, and we recovered the 2000. We held the 200 level as support. The morning note includes the ranges, and it's been solid as a rock. So without more headlines, I mean, even today we withstood a big headline. Without more flagrant headlines out of the blue, they should hold up. So I go and refer to them throughout the day. The one bad part of it is I hope they change the overnight lid on Apple from 110 to something higher, so we just have some room to go. Otherwise, the markets will have to run up with an anchor dangling from their feet. Nick signing out.